All right, good morning, gang. Good afternoon, good evening if you're watching this sometime in the future. Welcome back to Dan's Trades. As always, none of this is advice. Read the disclosures, do your own research. Trading View chart. We're the day before FOMC. I put on even the small or low impact news right now. BRIC Summit's happening. A couple days ago, I saw Sunday, Monday. Today is Tuesday, July 8th, 2025. There was a small business index, doesn't matter. I usually only watch the high and medium impact news, but I turned it on just because I was curious when I saw the 1045 candle, which was this one. It looked like it was maybe I thought maybe there was some treasury work happening or something, because usually when there's this large of moves suddenly, put it on the 15-second chart so you can see a little bit better. It was definitely a large move for the morning, right there. And there was no news. So this is purely levers being pulled, manual intervention if you take in my opinion, they're just playing games right now, seek and destroy. But we'll just talk about what happened, and we'll see what's cooking here for a little while. News right now, they're talking about the Texas floods, tariff delays. So tariff fund, maybe that's when that report came out. It's not headlined right now, but that could be the driver behind that and playing those games. But it is, like I've mentioned, I'll go back here and I'll turn off the bank holiday, so I have that one selected. So we'll just go back to the traditional one where it's no news, no higher medium impact. FOMC is tomorrow afternoon, so expecting consolidation up until that point in time. So tomorrow morning I'm expecting consolidation as well. And we'll show you what impatience looks like. No executions on here because I'm not executing in TradingView, as you've seen, now that I'm on that top one futures account. Here's a nice trade, but we'll get there in a second. That's just curious what's going on right now. It is 10:55. We're in a macro, halfway through it. One standard deviation looks interesting. We just crossed 0.5, which was earlier. This is on MNQ. I find this very interesting too. So this is the micro contract. Watch this low and negative 0.5 standard deviation as I switch it over to NQ. Oh, interesting. That one hit it right on the nuts. So there is tiny variances between the micro and the full contract. So I personally keep an eye on a little bit of both of them. As I'm trading the micro, I'm also watching the NQ chart and basing more of my trade off the NQ chart because that's the one that matters more. And MNQ is just for leverage purposes. So I find that interesting. So keep your eye on that if you haven't noticed that before. I'm not going to call it an SMT. Some people might. I'm not here to teach. I'm not here to do anything like that. I'm just calling what I see. So what I did do this morning was got a little impatient and started trading right ahead of this macro at 950 because I was looking at these highs up here. These are nice and juicy pre-market highs. We took it out or no, not even took it out. So just it left it there pre-market. So I'll cruise that up a little bit better here. You can see there's the pre-market high. There's where it ran to in the macro. So these are beautiful highs for targets. The market opened at 930, came down and swept below this low, took out these lows. And once we made this low, I was looking for a potential run up to take out these tops up here. Traders love these double tops, think it's a point of support resistance and it's never going to go back up there. And there's the first presentation. Fair value gap is right here. Tapped into it, ran lower. So it took out pre-market lows. So I was looking for a potential run up to take out pre-market highs. And we'll just bring over this chart. So there's where we're at. 941. 941 was when I got in the trade after this low right here. So took 3 contracts long here, targeting up there was my idea. We'll just draw it on like this. And I could plenty of places to take partials along the way. So low back below that, looking for it not to get back below there. That's my trade idea. About a 2-to-1, give or take. I can take a partial here, I can take a partial here. Plenty of places for partials along the way. So as we see, here's where I got 3 on here. This is a 15-second chart. Now the other chart, we're looking at 1-minute chart. Added 3 on when we came back down and retraced into this, just to get my price better because I was driving off of that small little dealing range. And it started moving the way I liked it. We took out the first high that it made here when I got in the trade, but I didn't want to obviously exit right away. But just watching price action, knowing today is a low probability day again, I wasn't in the mood to hold very long if I didn't see what I wanted to see. So I cut it off right there. So I was in 6 contracts and I said, I didn't like this candle. I wanted to see it continue. When it didn't make the higher high on this 15-second chart, I said, nope. And I cut it off right there. Yeah, it did tap into this little missy, but it didn't react the way I wanted to see it react. So I cut it. And I was perfectly happy with that because we just chopped. Consolidation, consolidation. And I saw one more opportunity. I said, okay, we came back down, dipped into this. Saw this as a nice rejection block here. We'll draw this on. Beautiful rejection, tapped consequent encroachment or mean threshold or 50%, whatever you want to call it, of this wick. Tapped that, went higher. So I took one more trade right here with 3 contracts. 22,905. Looking for this to be the inversion. Same idea. That's why this was once we traded above this top, or this low, I should say. Entered that trade and said, okay, we're same kind of idea. We're going to target back up there again. So we'll look at that on the trading view chart. Right there's where that happened. So there's where the tap in. So same idea. But so there's the 1-minute view. Here's the 15-second view. Nice reaction. So this is what I was looking to see. Some nice displacement. Love seeing that. Again, we stopped making higher highs. I didn't like the pause. I said, okay. I got 10 handles on that one. Just cut it off when I saw this one break back down. And again, I was happy because, look, we consolidated and ran lower. So going with my gut, enough timing, seat time, said, yep, cut that one off too. Don't need this. So those are short little scalps. I was up a little bit there. Decided to watch more. I said, okay, let's watch and actually see what. So this is all within the first 30 minutes so this is in the macro. That was the other idea too, because I do like trading inside the macros. And I saw this pull back down, entered long inside the macro, took it out in the first half of the macro since we did not continue up. Second half of the macro here, coming back down, 10 o'clock. So we didn't create the actual full 30-minute range. It was very tricky today because this low, where's the AM? Here we go. Here's 10 o'clock. So 9:30, get this out of the way. let's take off my OHLCs for right now. Hide FX4, hide that. We'll just have this one indicator on from David. So opening range high, opening range low, just so magically happens to be in the same as yesterday's PM first presentation fair value gap. Think that's random? Nothing is random in the world. There is no such thing as a coincidence. It's either derived by man or God. There are no randomness, there is no coincidences. But check this out. Opening range high, opening range low was not set literally until the 9:59 candle. Everybody that was watching it probably thought the low was in for the 30-minute range and was going to go higher because that's what they wanted you to think. Engineered this nice liquidity up here. So there's my first scalp. There's the second scalp. That's when I was done. So I said, okay, let's actually watch the 30-minute range. So I just started watching. I said, yep, that's interesting. So it was established there, and we dipped down below it, tapped into that PM first presentation from yesterday, consolidated, displaced, consolidated. And I said, wow, this is happening. I said, okay, the range is in. I started looking at bigger picture. I said, okay, what's all of our session liquidity doing? Let's look at a 15-minute chart for a second. I have another screen that has all of my higher time frames on it, power of 3, all that fun stuff. So I said, let me look at all the session liquidity and see what's happening here. And we were sitting like this. Where's 10 o'clock? There's move it over. Okay, so yeah. We hadn't taken, so that's why I reversed my ideas when I didn't see this, take this right away. You might come and finish the day here, we'll see. But I'm done for the day. I'm going to wait until tomorrow. I got my trades in, I'm happy. I used up enough of my mental capital, as you'll see, if you haven't already. I said with London was much smaller than Asia. Yesterday's PM session. So Asia lows are still in play. Pre-market. We had already taken London lows. That was the other reason I was looking for a New York PM or New York pre-market session high, and London highs are still up there, available for buy-side liquidity. But today is being a scalper day. I said I'm not holding for any long ones, as you saw. So my next idea was, okay, we're not going there yet. The 30-minute range expanded down, going lower. I said Asia lows look good. So I started building a short position right here. So we'd swept down, moving down. So these aren't going to happen now. The highs up there, that's going to be for later. London lows looked like they were in order. So I started entering shorts, 878, 885, 888, 9 contracts on. Wanted to target Asia lows. This is after the macro had closed. So here's the 10:10 or 10 o'clock to 10:10 macro. And I've seen many moves happen right after the macros. So consolidation macro. I can just draw 10 o'clock to 10:10 right there. There's the second macro. There's the first macro trade where I did. So that was my last long. Exited. Price came down, set the opening range, 30-minute opening range. Consolidated, engineered liquidity, dropped, took this one out, engineered more liquidity. That's when I said, okay, we're going to go for Asia lows. So I switched my short-term scalping buys from longs to shorts, intraday, short, short, short. And I wanted to see Asia lows, which was 22,857, 855. Yeah, 22,857 was my target. So we'll put a line on that. 22,857 is right there. Oh, look, it's getting there. So here's where I was short. Had my stop up above here. I think it was above this swing high. So here was the idea. Stop there, because if it does go back up there, then it's going to take those highs, but I was looking for Asia lows first. So hence the short positions. Nice displacement down. Then I didn't like it because it didn't continue. And this is where 5 more minutes of patience would have paid off. But like I said, this is where patience comes into play, and seat time and whatnot, and just knowing what today is. So I liked this displacement after I got my first position, so that gave me confidence in the trade. We hadn't taken even these lows out yet, so that was good. Entered additional here, displaced right after. Thank you very much, I like that. I didn't like this run up, so this is testing my mental capital. Final entry, 888. Ran up a little bit, never did get to where my stop was, obviously, because I didn't get taken out. And then 10:15, we got a new 15-minute. So here's the 15-minute. That was also the idea, as I was working off of the first 15 minutes, which, as you know, is this 10. So if I draw the fib on this 15-minute, didn't activate the tool, excuse me. So I wanted to get price entering this area. And there's the stop. That's the swing. I was looking at this for since I was targeting, here's my, so it's about a 1-to-1, same deal. So if it goes above this, so I didn't want to put the stop right here because these were nice relative equal highs. It could spike up there in a second and come back down. That's why I chose this high. Build my position. Not liking it, not greatly, so I'm in at 10:10. 5 minutes I'm in. And then this 5 minutes I was out because I didn't like this. I used up my mental capital, ran out of patience. I said, just close it, I'm in profit, it's fine. I only wanted, as we see up here, it is another green day. But then 5 more minutes of my patience. That's why I journal. It ran, I thought I was looking for it to continue this run, but when it didn't, I wanted a few more, take out a few more stops. Anybody that tried to chase this price came up and refilled this inefficiency, and then made the run right down to London lows, which is right there on the 15-minute chart. We'll just put this back on a 1. That's yesterday. Cruise back over. So there was the idea. So I had a scalp, and there was, so after this one, here's where I entered right here, short, and I just missed it by literally 5 minutes. So right here's where I exited, and then it hit. Here's the other very interesting thing. So this is the micro contracts. Again, that's why I called this out earlier. If you look at the NQ, as soon as we hit that 0.5 negative standard deviation, taking out London lows right here to the tick pretty much, maybe off by 1 tick. Then it immediately ran right back for first presentation fair value gap and setting 22,943.50, 22,942.75, less than a point. We have relative equal highs on the New York AM session. More engineering liquidity. So this was a beautiful run up. I did not take it since I was done. I said, nope, we're done. I'm not going 3 times, change my short-term bias. I was perfectly happy with that. But I find that so interesting to watch that. That was a beautiful run. But I'd used up my mental capital. I said, nope, use my discipline, stay out, just tape reading, because then look. So this is very common, seek and destroy, day ahead of FOMC, engineering liquidity, taking out session lows, running back up, engineering relative equal highs, seek and destroy it, take out lower low. So we got lower low, take it out, make a higher, make a new low, and now we're just consolidating before the lunch. It's 11:13. This is the in-between time. That macro just closed. So I'm not interested in taking any more trades. I'm not even going to look at the PM session. I'm just going to sit on my profits and be good to go. I'm happy with that. Another 160 day. I'm on 7-day green streak. We'll take that. So let's see. Maybe do a little bit of tape reading, but this isn't as fun a time. So that's when that happened. I got to make sure I don't actually click a button there. I should probably turn this off, but that's fine. I almost hit the buy button by accident there. Just moving the chart around. So yeah, this is interesting. That 15-second chart at 10:45. That's why I was like, did we have a treasury auction happen? That's why I turned on the low impact news, but nope. This is just pure manual intervention, in my opinion, at 10:45, or the algo said 10:45, we're gonna rip some faces off, one of the two. And now we're just kind of sitting here doing nothing, so probably won't be interesting to read price right now. Curious, anybody that listens, watches after the fact. I may or may not. I said this months ago. I'm not going to do anything soon. I probably won't even talk about it, but maybe I will. If I'm not going to trade, maybe I'll do some tape reading live. Maybe I'll do some live streaming. I don't know if that's of interest to anybody or not. I have a few people that follow. Don't know if they're random people. Don't know if they're repeats. I don't watch the analytics that much, but I figure if it's helping me, maybe it'll help someone else. So I wanted to show a little bit about, patience, discipline, and where I'm at. And if you're looking for a good teacher, since Michael is retired, FX for a Living is the best one I know of. He'll teach it to you straight, and everything is based on ICT Concepts. The only thing that he adds to it is his candle pair theory, CPT, which is interesting. I like it. I use it for Confluence. There's so many nuances to it, but you don't have to have it. Just like some people live and die by breakers. I don't give a rip about breakers. I can see them after the fact, but I don't look for them in my trading because everyone sees price differently. So you got to find out what you can see if you're here looking for advice or how to figure this stuff out. This 30-minute opening range indicator in itself is, you could just have that and never need anything else. There's so much in this, it's ridiculous. And I can't believe he does it for free. David, you're incredible. And obviously the OHLC tool is ridiculously underpriced, but he knows it, and he's not about the money. That's why I love it. Michael's not about the money. Everything's out there for free. So find the people that are doing things for the good of people and not to make money. Look at the settings in here. You can adjust your fair value gaps for the first presentation, depending on the day, between the 1st and the 5th. Macros, midnight opening, first presentation displacement at midnight. Midnight open, looking for Venom candidates. You can change the label sizes. You can show standard deviations. These are just the ones by default. So depending on what the day does, medium volatility, low volatility, high volatility. That's all that you can adjust. Everything else is magic for you. First presentations, you can pick which one, but yeah, they draw in opening range, high and low, London range, high and low, PM ranges, lunch macros, and it works on the 1-minute chart. So there's the first displacement at midnight, draws it in purple. There's the 30-minute opening range, because that was probably 35. So there we go, it swept that and ran below. There's a trade in itself right there. Sweep one side, go to the other. It's a common thing in price delivery. Look at the charts long enough, you'll see it. And this just helps you see things. The longer you look at this, the more you look at this, it's undeniable. And if you think it is, then you got to look at it longer. Here's what the all-time high used to be. So I leave my all-time highs in there just to see how price reacts to it after it uses it. And this isn't anytime soon, right? 22,869 was quite a while ago when I set that up there. But I don't delete things immediately because I find it interesting the way price reacts to it after the fact. But here's, lunch macro, final hour macros, market on close macros. He's dialing them all in for you. New York lunch macros, what we're going to be starting in 12 minutes. But yeah, it extends until you need it. And some things you can draw it on there and keep it yourself. So if I wanted to keep this, I can just draw in. I could draw my own box in and then just leave it there permanently. But you can use this for identifying where things are if you have a hard time finding when the first presentation fair value gap is, when the first real displacement is. This free tool will do it for you. Think that's random? The opening range high of the day. Price runs above it, immediately turns around. All the buying pressure came in right here, right? At 2:27 in the morning. Whole bunch of people woke up and said, no, price can't go any lower. Until later. I love it. And then, interesting, it hit in the first presentation displacement area and ran again. So you find what makes sense to you and you start building your model. And everyone's different. Everyone sees price different. So find what works for you. These tools just help you find what may work for you. Look at all the conglomeration of PD arrays that are building right here. Do you think that's not a consolidation day? London range, London open high, London open low, midnight displacement, PM, opening range high from yesterday. All these AM opening range high. So if that doesn't say consolidation, keep watching because that's totally consolidation, which is normal for pre-FOMC times. And then the OHLC tool, which is a paid tool, and you've seen many times too. You can turn on and off so many things in here. It's also ridiculous. And how many, you pick and choose what time frame you want to be a trader for, whether you're short-term, long-term, intermediate term. You want to be a position trader, start doing stuff on a yearly basis. You want to do ultra scalping. You can set these tools based on how you are as a trader. Quadrants, equilibrium, fractal highs and lows. I don't even have half of it turned on. Engineering, neutralize liquidity points, you can enable that. I do love the macros. Current price box, you see that drawn in. That's why it's gray right here, because it's a bearish candle right now. I love the skeletons. You can see higher, so here's the open and the low, so you can see the underlying skeleton here, and you can adjust everything. You can adjust these session colors based on however you want to see time. So I do have those enabled because I love it. Algorithmic swing highs and lows, that's beautiful. Here's where you can find your fair value gaps. You can put in more if you want. So right now I just have one of each. That one's been inverted, so it's come inversion, so it's the orange color, all ICT standards. You want to see more, turn on more, watch this. Boom, I'll make it 3. You'll see more populate. Boom, thank you. So 2 inversions, and then we're playing in this one right at consequent encroachment. You can have it draw the line in, show CE. If you don't know what it is, you can put a label on it. It'll add labels. I don't need the labels, I know how to read them, so you can use it to train your eyes. Opens, I like the 1 hour opens, so that's what these lines are. So there's the 11 o'clock open is right there, there's the 10 o'clock open, there's the 9 o'clock open. And you can have your own custom times. So I like making sure midnight's always on there. If I don't have the FX4 model turned on, I do double up, make sure I always know where midnight open is. And you can put your own custom stuff, and then daily, monthly, weekly, and days of week separators. Different kills, so different ways of looking at kill zones. This was the original one that you had, then you added on the sessions. And you can have a dashboard if you want it. So many things that this tool does. It's wild. Thank you, David. Thank you. So I do have those. You can turn on as many as you want. So that's the fractal lows you see right there. 60-minute high, 60-minute low. And what I do is I have this other one in here because I have this one set to 15 minutes. So I can see, hey, look, we're bearish right now because the most recent price delivery is down here. There's the 15-minute high and the 15-minute low matches the 60-minute low. So you can start watching confluences. And he teaches all of this inside the OHLC Academy, how to properly read price, what a retracement is, what an expansion is. They all sound good, and well, you know, if you don't want to go through the hundreds of hours of the compendium of ICT's knowledge, which is where all this comes from. So it's all Michael J. Huddleston, all David, and all by the grace of God is how we do all this. And I praise God every day and thank him for giving me the ability to understand this. And to know when to do things, and it'll help build your discipline. Previous 60-minute low matching the AM low, so it's all drawn in for you. Nice target right there. Not taking any trades, not advice. I know no one can right now because it's not live. But if I ever start saying that, do your own research. Everyone's in control of their own boat. $11:30, the lunch macro starts. So this is the in-between time. This is when they usually get people because they're trading out of just their chasing price stuff. People want to just chase price. All right. Well, I'll probably end it there, about a half an hour. Again, if you got any questions, throw something in the comment section. If you like this, I hope it helps. If you don't, I'm sorry. Find what works for you. Not sorry. Let's just look at the FX4 model out of curiosity. That's an awesome one too. And that one works best on the 15-minute chart, although it does draw. So there's previous day's equilibrium. There's the midnight open. Previous day's low is down there. Previous day's high. So that's what that draws, as well as the consolidation time frame. So there's the FX4 model, which is a free indicator as well. So find the people that give you things for free that you could base your entire trading career off of just this one model. I know many people do. The FX4 model, this is free in TradingView. You don't need to sign up for anything. Same thing goes for this one. I think you have to just enable this through, I forget exactly. So David, sorry. I know I got everything through yours, but I know you can get this one for free. Hit them up on anywhere and we'll find out for you. Put those two together and you've got life-changing stuff. This might be actually too much until, so you can turn things off until you understand it and you build your model around it. Sometimes it's too much sauce. Less is more. All right, we'll call our quits probably there. Interesting for sure. See what lunch does. Maybe I'll come back for the PM and do some tape reading live. I don't know. Maybe I'll try that. Maybe I'll test going live in the PM. I don't know. No promises. All right. Take care, all. Hope you're well. And remember, tomorrow was promised for none of us. Live for today. God bless.